All right. Good morning, everybody. We are live. Yes, we are. Welcome to the morning show here on Stock Market TV. Mr. Israel, Steve Strazza. No JC today. Sadly, JC, I suspect, I don't know, but I suspect he has a bit of a Disney hangover. It's been known to happen. I get it. Disney's exhausting. When you go to Disney, you need a vacation from your vacation. Disney is not a vacation. Disney is work. It is effort. It is being on your feet for 12 hours a day, right? It is exhausting. So I don't blame them. So JC will be back on Monday here. But I got Steve and I got Alfonso and we got Kenny and we got Louie. So we got a show today. We got things to discuss. I do want to talk about some of the earnings from last night. We had Nike, we had FedEx. I want to talk about value stocks getting just like killed as we head into the end of the year. Um, and something I've been thinking about too is just like, let's just say next week is equally as bad as this week, right? And it's gonna like not spoil, but it's gonna like color in a lot. Like we're gonna look back on this year in 5 years, and we're gonna look back on like the year to date returns, and it's not gonna look as good, but it was really good for most of the year in most things, right? Not everything, right? But most things. It was a pretty good year. So let's not let the like this week and next week potentially spoil what has been an otherwise pretty good year for most asset classes and most indexes, right? Not all, obviously. There are always going to be losers, but that's the way it goes. Okay, so where are we at? Uh, let's catch up on the chat for a second. Yes, we do not have a JC Batman signal yet. We should probably get it. Um, I'll work on that. How about that? I'll work on it. So anyway, I got Steve here. We got some charts. We got some things to discuss. Oh, real quick, PSA. If anybody missed the live All Star Options event from yesterday, I'm going to drop the link in the chat right now, and you should check it out. Sean and I went live at 2 o'clock for about 40 or so minutes, and Sean basically walked through the different market scenarios that could happen next year and how he would approach each one as an options trader. There is one scenario that he thinks is more likely than the others. Talked about that, talked about why that is. But more importantly, it's really just about being prepared for the different scenarios for next year. Link is going in the chat now. There it is. 3, 2, 1. Okay. All right. Let's start the show. Hit the like button. Subscribe to the channel. Let's boogie. Do I have a Steve Strazza in the house? I think I do. I know I do. I see him here. But I'm gonna wait for him to give me the okay on when he is good to be brought on because I think he's doing some. He's not trading. I don't think Steve trades pre-market. Maybe he does. He doesn't tell us. But all right, Steve is here. We'll bring him on in like 1 minute. He's doing whatever it is he's doing backstage. So stand by for Steve. Uh, anyway, how we doing, chat? We're off to a good start. Friday is good. It's been a bit of a week, right? But that's okay. We've got the Santa Claus rally, allegedly, which starts next week, supposedly, if it happens, right? We'll see. Speaking of next week, programming note. We're doing shows Monday and Tuesday. We are obviously not doing a show on Wednesday, and I don't think we'll do a show Thursday and Friday either. So our last show of the week will be next Tuesday. That's the tentative plan for now. I'm telling you all now in case I forget. I've said my piece. Okay, overnight futures. Where do we stand? We're in the red, right? Well, let's scroll up a little. Yes, we are in the red across the board. Look at gold. Gold up 0.5% this morning. Okay, I see you, gold. Dollars up. What else is new? Everything else is in the red. Nasdaq down 1%, leading the way there. Russell, S&Ps, crude, bonds, Europe, Asia. Is anything up this morning besides gold? Anything on my futures list up this morning? I don't even think so. No, I think it's just gold. All right. Well, that's where things stand. Steve, can I bring you on? Are we doing this? Yes. I might just do it. Oh, he said don't do it now. Okay, I won't do it now. All right. So overnight futures, we are down. It is what it is. Let's talk about. Can we bring up the chart of Nike, please, Alfonso? This was a very interesting overnight session. Nike was up last night to $86. It is now down to close at 77, was up to 86, and is now down at 72. Actually, just at $71 a few minutes ago. This report from Nike was really more of the same. They've been talking in the recent quarters about the turnaround efforts for them. We remember from I think it was last quarter, the quarter before that, they had just basically severed a bunch of relationships, like Foot Locker, for example, and they were talking about this turnaround effort, but it seems like it's taking a very long time. So the numbers from the last quarter were like okay, but the guidance was very much not okay, right? So they're guiding for a revenue decline for the fiscal year in the mid single digits. They had previously said that they were going to grow revenues. Typically, you want to grow revenues, right? That's kind of the goal here. They're guiding for a revenue drop in the mid single digits for next year. Q1 specifically, they're guiding for a 10% decrease in revenue year over year. So it's taken a while. They're going through it, is the bottom line. Nike, they're in the shit. They're going through it. They have a new CEO. So that's the story here. It's going to take a bunch of retail stocks with it this morning and a bunch of apparel stocks with it this morning. No surprise to see Under Armour down as well. They're all going to trade down on Nike's report, but it's been tough. Obviously, you see the chart. That looks awfully toppy. Awfully toppy. Steve, does that look toppy to you?
What happened though? Because last night Nike was up. The initial reaction was higher, so they spiked it higher, and then it got fade. Like, what happened?
I know. I looked at Nike at like 4:30, saw it was up, and said, "Okay, I will move on with my life." And then this morning, I looked, and it was all the way down, and gave it all back. So what happened was, I mean, the headline numbers, their earnings were okay, right? The numbers from last quarter were fine, but again, it must have been. It had to be the conference call. It's the only explanation, right? And I didn't listen to the conference call, so I don't know what they said. But
I saw something about the new CEO lowballing guidance.
Well, that's exactly what they. I mean, that's what they did. The guidance came in below everyone's estimates, right? The guidance for the quarter, the guidance for the year. They basically said, "Everyone, slow down. This is going to take us a while." So that's where we're at.
You know, I would love to get behind some sort of turnaround story at Nike, but I don't even know who wears this anymore.
Oh, and people were Nike.
I love Nike. I still wear Nike, but I don't see them in the wild. All I see is Hoka's.
Oh yeah, we were talking the other
All
day.
I see is Hoka's. Yeah.
Was it Deck? Oh, look at Deckers. Goodness gracious.
Yeah, you could tell.
Yeah.
Doing something right. Okay, do we have any other big earnings reports?
Yeah, we had the FedEx, which is up because spinoffs. They are spinning off their their trucking freight unit. The street usually likes that when companies spin off like the weaker parts of their business. And that's what's happening here. So I can give you FedEx's numbers, but the real headline here is they're spinning off this unit, and that is why we are up. What are we up now this morning? We were up. Yeah, we're up like 9%, right? So let's read the headline here. Yeah. Guidance, earnings, fine, whatever. They are spinning off the FedEx Freight division, which handles less than truckload shipping. This is going to happen in the next year and a half or so. So they say it'll unlock $20 billion in shareholder value. Yeah. So spin-offs. If you're going to spin off an underperforming part of the business, Wall Street likes that. That's the bottom line.
You want to talk about some scary charts quick? I mean,
how scary? How scary is it? Is it like a value stock of like the a chart of like the IVE, the value ETF? Because that's pretty scary. No,
That one you find that one scary, huh? Yeah.
maybe not scary is a strong word, but it like ugly, disgusting. I would say disgusting, scary.
What's the worst looking chart right now, chat?
Doesn't scare me.
There's a lot of
Per
them.
se,
I want to talk
nothing
about
really
Europe.
scares me.
It's because of
Rick
Europe.
asked me for my most bearish chart yesterday, and I gave him a chart of like the economy, or the housing market. I don't know.
He can write a long report this week. The number of industry group indexes that have now given back all of their gains and are in a lost position since the election continues to grow. It's happening to more and more concerning groups, right? We don't want to lose the risk on or offensive groups. Talking about things like home builders, metals and mining, industrials, right? All of these groups have been absolutely slammed. Now, financials, just about giving it all back here. Not good, but nobody's talking about stocks overseas. If you could throw up the Vanguard Europe, I want to start there today. Yeah, here you go. The price patterns out in Europe, really developed equity markets outside of the United States, look a lot like they did in late 2021, early 2022. Got momentum divergences, these tired looking ranges. Last time it was distribution. These were valid tops and they led to some massive downside, right? These were those bear market tops of 2022. We saw them everywhere. And you could do this on EFA. You could do this on, the individual country ETFs in Europe, United Kingdom. They all look like this. And a lot of them are topping out at the same exact place. Major polarity zone at the prior cycle highs. Does this scare you?
Is this like an inverse head and shoulders?
No, this is the real thing, dog.
Is this a real thing?
The inverse head and shoulders is at the bottom. Yeah.
Yeah, that's true. You're right. Okay.
This is like the real thing.
Yeah.
Yeah.
All right. I would need more than just Europe to freak me out.
Isn't
But
this
also like,
cool, Billy? Yeah.
but like, what are you saying? You're saying that the international markets are underperforming? What do you freaking do? Right?
You don't want to lose all of them, right? You don't be sitting here super bullish U.S. equities while nothing else in terms of stock markets around the world is working.
Really? Why not?
Asia's not really working. Japan's been good. The rest of Asia, right?
Isn't that what the environment we've been in for like 15 years now?
No, man. Come on. They hop in and join and go up.
Yeah.
Absolute
And
terms,
then they hop out again.
This is an absolute price chart. You want Europe going up if it's a, rip-roaring bull market here in the United States. You want the prices of stocks in Europe at least to be going higher, not completing primary trend reversals, topping out, rolling over.
I want to see the weighting just because everything I read about the UK is how terrible it is over there.
You've been talking to JC too much with checking all these weightings.
No, I just want to see.
Waiting police over here.
I just want to see.
You want more scary? I can give you more scary.
This doesn't have a country breakdown for me. Somewhere else. No, but like everything I read about the UK is like how bad things are over there. So maybe this could just be a UK story. I don't know. I don't know what's in this thing.
No, it's not a UK story. Look at IFA.
Okay,
all right, stop that. This is developed markets outside of North America. You're gonna make me do more charting for you here to prove to you what's going on. Jesus, Spencer.
Yeah, I own IFA. It's been pretty bad.
Does IFA not look the same?
No, it looks pretty bad. Yeah.
All right. These are tops, is my point. They can't be tops. You can't lose developed markets around the United States in this way, right? Where they would top out and now enter new primary downtrends. Can't lose them like that in the middle of a bull market. So these charts really, really stand out to me.
In fairness, they also looked like this in August, right?
Yeah, but they dug in, right? So they need to dig in again.
Right.
But yes, you're absolutely right. So, here's IFA oversold now. oversold. We don't like to see that, especially with these topping patterns. Think about it, Spencer. When we fade these tops, right, patterns that look like this, they're typically not getting oversold. When they get oversold, then we get a little suspect. And we start saying things like, maybe it is a top, right? So here's EFA, throw it up. And here's also what's different versus August. Last time, throw up the EFA. What is different today than the last time these tops, right, were testing their lower bounds back in August? Well, throw up the chart of the dollar. That's really different. Right? So dollar rising, going to be a headwind on international stock markets, especially. And I think that's going to continue to drive these distribution patterns and EFA and VGK lower if the dollar is going to stick this breakout through the upper bounds of its range. If this one is valid, going up, go back to the last one. These are probably going to be valid going down. Capiche?
Yeah. Yeah. In all seriousness, that the dollar chart from yesterday that you showed is really the most bearish thing.
That is the most important chart right now. It really is. If that's a valid breakout and we're looking at higher dollars, higher interest rates, and these things are going to be, rocking up and to the right, you're going to see a lot more tops. Now, remember, we were making the bet. Santa Claus is coming to town. Dollar's going to hold the upper bound, revert lower, right? And Santa's going to be coming, and they're all going to be, chasing the hot stocks in the year end, and the dollar's going to be getting driven back to the lower bounds of its range, and interest rates are probably recoiling, and that's sparking some sort of up leg. It's not happening. When the data changes, we change our minds, sir.
I would say we are in the process. We're in that gray area right now. We're like
some people could turn full bear right now. I wouldn't get mad at them. The evidence is building. You can finally make a valid argument. JC wants to come on the show and say crazy bear porn things Monday. I got to give it to him. There's a lot there now. Those downside momentum thrusts that we saw in July, August, September, we could look back one day and say that was bearish initiation. Investors ringing the register, warning us that the end was near.
With hindsight, sure.
Right? Those could be downside initiation readings when we look back. Not dips to buy. We'll see. I'm staying bullish. I think there's a lot of things that are still holding up. I don't want to lose tech. These tech leaders really got to hang on here. I think that's so important. Financials and industrials have to dig in. They filled their gaps. Now buyers got to show up, right? I think we learn a lot today, next week, the way we close the year. We'll see. Jason Shapiro got bearish 2 weeks ago. We like Jason.
Yeah, look, we're in that sort of gray area where, like, the market is like it's like the Titanic, right? It can't turn on a dime, right? It takes. I mean, I suppose it can, but it doesn't usually do that. It takes a little bit of time to change the direction of the environment. So maybe we're in that now, but maybe we're not. I don't know. I don't know
I think
much.
they dig in here. I think go back and look at some of the charts in October of last year and remember what you were thinking then, right? And the damage was worse then for the most part. You look at something like Homebuilders, ITB, it looks terrible right now, right? They wore a 20% correction into late October last year. ITB is currently sitting down more or less the same exact amount as it was back then. They showed up and they bought them. RSI 14 and ITB is below 20 right now. It's absolutely insane. It's an insane reading to see in a bull market. So if they're going to show up and buy the dip, they're coming like today. Now.
Okay, so where is the relative strength been in tech?
In Homebuilders?
No. Broadly speaking.
Tech, man. Tech, speculative growth. That continues to be the area. Tech, all the tech.
Yeah, the XLG. XLG is okay. right? That's the top 50. RKK is okay,
Dude,
right?
the arcs look great. Like, look at Arc Q out here. Some of these areas are holding up really well.
That's
Value.
interesting. So what does that say that speculative growth is holding up better than
Oh, dude.
everything
With
else?
interest rates doing what they are, it's wild. So we'll see. Is that a big obvious area that needs to catch down, or are they telling us something? Right. We'll know soon. We'll know soon. I don't like all the failed breakouts. We've seen them repaired before. I don't like the way the banks have been crushed out here in December, filling those election gaps. But you think about something like the banks. I mean, I- the run that they had off the September lows or August lows, absolutely epic. So this could just be some standard corrective action. We'll have to see. The failed breakouts in materials, metals and minings, all the small cap stuff. It's not good. It's not good. You don't want to see these bases come undone again. Something like the Russell microcaps come to mind, right? IWC, like microcaps falling back in the box at this point. It's like, really? How many times have we talked about that? IWM, Russell 2000, been waiting for these all-time highs forever. It has taken so long to get a new all-time high this cycle from the Russell 2000. As soon as we get there, slammed, failed breakout. So just seeing too much of that. And at this point, Spencer, the selling has been going on all month. We're getting these big red candles out here this week. Russell 2000, down 10% from those old highs. So to repair this damage and get back there, we're looking at 11, 12% rally. That's going to take some time to repair.
Are we going to look back, Steve, and say, 2024 wasn't that great a year?
That's a great question. I think for some areas that is going to be the case.
Because if you were here
You
for
were sideways.
10.5 months out of the year was pretty good, right?
It depends on what you were in, right?
That's true. Yeah.
Like 2024 was good for what? And what period, right? Because something like Bitcoin sideways almost all year, and then you just get an explosion in the last month or two.
That's true.
And a lot of like growthy stuff looked that way this year. Russell 2000 sideways pretty much all year. Then all of a sudden we get this pop, but now it's failing. So there's been a lot of sideways. I would say on balance, sideways with an upward bias, but it's been a messy year. You know what it's felt like, Spencer? Year 2 of a bull market. They're really sloppy sometimes. Fraught with consolidation. And that's kind of what's been going on.
All right. Oh shoot. Do we have Kenny? No, we don't have Kenny here yet. Okay.
Is Louis coming on today?
Yes, we have Louis a little bit later. We have Alfonso first, and then Louis. But I want to wait to see if Kenny is going to join. And if it's not, I'll just bring on Alfonso. But let's see. All right. Yeah, you're making me a little worried. Between you and Grant, I gotta tell you, a little worried.
Who, me?
Yeah. Well, because Grant's bear market dashboard is lighting up, right? All the things that
Oh yeah.
Yeah. So
I think we're gonna be all right. I think maybe this is the scare and the reset. Maybe get sentiment back down to more of a tailwind position. I think this could be a very necessary reset to set us up for a good 2025.
By the way, to go without saying, if you're a company and you have bad news, try to hold it if you can, right? Because they're killing you out there. Like Novo Nordisk this morning, and NVO is down 21%.
Well, you can't own these stocks.
They had a data readout that came in not even that much. It was a little bit below estimates. It was the here. I'll read you the data that they came out with. So this new drug they're working on called CagriSema, I hope I'm saying that right, helped patients reduce their weight by 22.7%, which is below the 25% that it had previously forecast. So, like this drug, they're saying it still worked. It didn't work quite as well as they said it would, but it still freaking worked. Anyway, it's down 21% this morning. They're killing it.
I made a little money on the short side on this one in October and November, not in it anymore. But I think the opportunity now, I think you short Lilly. Like this short, I don't want to say it's over, but I think the easy money's been made. Man, it would have been nice to catch this move. But this top is like completed, right? And it's already legging lower. We have confirmation that this is a top. We called out these stocks as good shorts a couple months ago when we got the monthly momentum crossovers. So that was back in September, right? Monthly momentum crossovers, and you're getting follow through. These are valid signals for now, but I think Lilly is much riper for a short. I'm not going to short it because, God, it's an $800 stock, but I wish it wasn't, Spencer.
Also up this morning. So yeah, this has been a probably a decent pairs trade. That's what Sam is saying.
I don't even think you pairs trade it though. Is what I'm saying. You fade the whole group. It's over. It's over for the GLP-1.
That's also worked, but to varying degrees, right? But so anyway,
Lilly
is up this morning.
But you're getting a pop today on this news, right? Because one loses, the other wins. Kind of is the idea here. I think with this data release. So you're getting a pop today, pre-market. Lilly surging 7%, but already upper wicking because it ran right into the VWAP from the all-time highs from the late August or early September all-time highs, which is the same place that capped its advance back earlier this month, and then also back in late October. This VWAP keeps coming down and putting a cap on rallies, and I think this is a perfect place to get short Lilly here.
I'm not going to argue with you.
Yeah,
I'm not going to argue.
Yeah, see, everybody in the chat's like, yeah, Eli Lilly's the winner. No, they're both losers. They're both losers. Forget these story stocks. The story's over. You are so late to this party. If you're coming in buying Eli Lilly today because of the weight loss drug story, oh my God.
Let's not forget, the stock was $500 a year ago. The stock was $500 a year ago, right? It almost doubled at one point.
Right? Spencer, this stock, back in 2019 was under 100.
Yeah, that too.
So Eli Lilly's gone like almost 10x in a couple of years.
Yep.
It's really way too much.
All right, hey Fonz, you want to come on?
Yeah, get Fonz on. I'm gonna go do a little coffee refresh.
Let's do it. Where's my Alfonso? Fonz, where's your video? There it is.
Hey,
there we go.
Spencer.
What up? How we doing?
All good.
All right. Are you as worried as Steve and Grant and others on the All-Star Charts team?
I mean, I'm in the camp of let's the data decide what actions and what environment we're heading into, right? I think Sean's yesterday live stream was very good for that reason. But today bring you 4 charts I'm watching in this corrective wave tape right now. So let's get into them.
Let's do it. What do you got?
I mean, yeah, the first one is the percentage of S&P 500 stocks at new lows. Bulls definitely don't want to see an expansion in long-term lows, 6-month lows, 12 months. For now, we have seen like a spike in short-term lows. So I think this chart brings me the question. If this is a dip we should buy, or are we gonna see something bigger coming in the next few days, in the next few weeks? So definitely, I'm watching this breadth metrics to understand how deep and how meaningful this corrective wave is or could be. The next chart is consumer staples versus S&P 500. Consumer staple stocks are often known as defensive stocks. When they outperform on a relative basis, they tend to mention some troubles for the broader market. Risk is rising. So this ratio is at a logical level of support at the dot-com bubble lows. So I'm watching this ratio very careful. If you see this line go up, it will mean defensive rotation travels ahead for stocks. So I think this is a very, very clean chart. The next chart, I agree with Steve. You don't want to see offensive sectors of offensive groups going down or getting hit hard. So here is Homebuilders overlaid with the S&P 500. On the gray areas, I mark up the potential, divergence in price. So let's start on the left. When Homebuilders get hit first, the S&P 500 tends to follow. They often act as a leading indicator, similar to semiconductors, even transport sometimes. But definitely this one is one chart I'm watching right now. If you look at the recent price action, we're having, like a negative divergence there. Home builders are getting hit on a relative basis. It's not looking good. It's shaping up, top information. You don't want to see these stops resolve and complete to the downside, because that will be trouble for equities and risk assets in general.
These lines look pretty correlated to me. I know. I mean, yes, there are a couple of small in 2008, notwithstanding, but there's a couple of small examples. But by and large, these divergences are small.
Yeah, I mean they happen quite often. For example, in 2018, while the S&P was making higher highs, home builders were going down, and then it came that correction in December on 2018. I remember that. Noticed that in September, October of 2022. Home builders bottom first, and the broader market, the S&P 500, bottom a couple of months and a couple of weeks later. So I'm watching this. I mean, the takeaway here is you don't want to see offensive sectors get hit, and you want to see these sectors and industry groups to hold. That's the main takeaway from this chart. And the next one, of course, you have to mention the dollar. I wrote about it yesterday. It has been ripping higher in a vertical line since it bottomed 3 months ago. We consolidated for a couple of weeks, and now we're trying to break out of this base. The dollar have acted in the past cycle, act as a safe haven assets. So a breakout and a decisive move above 107 is not good for risk assets. It could put some pressure in stocks, in the equity market. So you don't want to see, the bulls don't want to see the dollar breakout. Ideally, they will want to see the dollar, put a failed breakout, getting back into the range. And that's the main takeaway for the dollar.
Well, the money has to rotate somewhere, right?
Exactly. Yeah. So I remember the past cycle, the only safe haven was dollar. In previous cycles, sometimes were bonds, but the most recent examples, the most recent data point we have has been the dollar.
Yeah, I think 2022 sort of put the kibosh on the idea of like the 60-40 portfolio being like diversified, because stocks got destroyed and bonds got destroyed too.
Yeah.
Right.
Mm-hmm.
So sucks for you if you own stocks and bonds, because it didn't help you at all. Right.
Yeah, that's right.
So plus I don't actually know if anyone like any real person has a 60-40 portfolio. It's like textbook type of thing, but nobody actually, like, maybe if you're like 60 years old you do, but I don't know. But no one I know, I should say, has 60-40 portfolio, stocks and bonds. So all right. So we can't hide in risk assets. So, and then we'll have Louis on in a few minutes to talk to us about how crypto looks terrible as well. Can't hide there. Can't hide in bonds. It's all about the dollar. Is that just going to be the story here until something changes?
Look, it's not just one chart. It's a couple. It's the weight of the evidence approach. It's like a puzzle. So these charts and this and what they mean, they are just some cards on the table to watch. So far, I'm looking at these breast charts. I don't want to see an expansion in the lows. I don't want to see stocks getting oversold because oversold conditions are not characteristic of uptrends at the end of the day. So, and the other one I really like is the defensive rotation charts. I like to watch the consumer staples ratios, whether it is relative to the broader market or relative to consumer discretionary, because by looking at those charts, you can have a good clue of how investors are positioning themselves, offensive or defensive. So, yeah, those are the main charts I'm watching right now. Of course, looking at industrials, the banks, giving it all the gains, post-election gains. That's meaningful too. Transfer, put in failed breakout, materials, healthcare, getting back into the range, metals and minings, ugly failed breakout. So I'm watching also some potential failed breakouts. You don't want to see these failed breakouts materialize.
Yeah, when you look at just the sectors and you say, "Hey, discretionary, not so terrible." Oh wait, shit, it's just Amazon test, right? Because under the surface, discretionary does look pretty, pretty bad.
Well, you definitely don't want to see a leading sector as discretionary or tech getting hit. That's for sure.
But what's the equal weight discretionary again? What's that symbol?
RSPD.
All right, not a lot to like from a charts perspective right now. So we'll see. I don't know. What is Steve doing? Steve is dropping a bunch of charts in Slack right now. Yeah, okay, it's more of the same. These are more things that look bad.
That was
Except
good.
for-
Throw
except for
up.
maybe this is video chart.
I like the XLP SPY. I think a breakdown in that ratio is a really nice green light, party on for bulls. I don't think that happens with the dollar breaking out of this range, though. And all of these failed breakouts, this list can't get any longer. This needs to stop, and we need to start repairing some. Here's one that really stands out that you're not hearing much about. This is the big banks. This is KBE. Massive base here, right? We thought the election was the perfect catalyst to break the banks out. Finally, through this multi-decade polarity zone, right? Bank deregulation, Trump trade, banks. Perfect. They did it, and then they undid it. I mean, that was nasty. We spiked right through. It looked like we were going. Trend was already extended. Stocks have been working for a long time. They slammed it right back into the box. You need breakouts like this to stick, not keep failing. Throw up the metals and mining too. Much shorter time frame here. Multi-year polarity zone in this case, but slammed hard right back into the box. And the problem with a lot of these failed breakouts, Alfonso, let me know if you agree, we're getting confirmation in the form of fast moves to the downside, right? Like that, we are getting immediate feedback saying, oh, these failed breakouts are real. These are failed breakouts to short as a trader, because look at the downside follow through that you're getting once they
and look at and look at the lower pain. Look at the momentum getting oversold for the first time in years. Not only in the metals and mining. Look at the equal weight S&P getting oversold. So oversold conditions are not characteristic of uptrends, not characteristics of healthy trends. on the upside. So
And these are deep oversold readings, Fonz. As I'm doing my chart reviews, I'm zooming out and I keep saying to myself, oh, wow, most oversold since COVID. Most oversold since COVID. We're deep.
yeah, for example, a great example is Homebuilders. Most oversold conditions since March 2020. So yeah,
Seen a
that's
lot of
a warning signal.
Equal weight semiconductors. We could draw a picture like this, slammed back into the box. We don't want to lose all of these important groups.
Yeah, I totally agree with you.
Steve, you keep putting things back in the box. What's out of the box at this point?
Everything's back in the box these days. NASDAQ 100 is still out of the box. The big cap techs and mega growths are still out of the box. The ARCs are still hanging on out of the box. Small caps are back in a box, maybe not the main box, but they didn't stick their breakouts to new all-time highs.
All right, let's do this real quickly. I'm going to bring on Kenny for just a couple minutes, and then we'll bring on Louis, and we'll see what's going on in crypto land. All right?
Oh, smashed last night.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
All right, Kenny, what is going on? Is this the beginning of the end here?
Nah, man, this is now epic. You know, the 539 out on the Qs, into the short, into the Fed. Yesterday, my friends, was what we call the sucker's gap. Remember, I was talking about this last night. If they gap the market up after a sell-off, look for some residual sellers. So we got that. And the chop yesterday said to us, you know what? I'm staying short overnight. We just started covering right at about 8:31. As soon as the economic data came out, UVXY falls, we start covering. And right now, it's the Q bits and the Q birds. We're long right now, and so far, so good. I don't think the end is here, but I'll tell you when I will know. If UVXY is over 30, the end is here. And I'm not kidding. If UVXY recovers on a Friday, we are going down, and the Qs are going to be at 505. We're going to test that 505.41. And if we break that, we got at least 3 more points to the downside, and then we're going to give it Jerry Orr back to 495.85. But that's only if UVXY recovers. It's very vital. If that product, which usually dies on a Friday, comes back to life, that'll be the 3rd day of the rally. That usually means we got a lot more selling. So that's where we're at right now. We covered, we bought the dip, but now we're just back into the quantum stock. So far, so good.
Anything to the fact that today's a triple or a quad witch or whatever you want to call it?
I do think there will be a little excessive volatility, but I welcome that, you know. And right now, it's really just like I explained. It's really, sometimes it is this simple. You got to watch the VIX. You got to watch the UVXY. Watch these derivatives of the VIX. When they wake up and stay strong, that's a really, really big tell, because they generally always go down. The VIX usually goes down. The UVXY is always going down. But when they wake up, like UVXY did over the last 3 days, that's a very, very important sign. So again, that's what we're doing right now. And right now, the buyers are here. The battle is on. And you know, I don't know if I'm going to make it till 4 o'clock today. I'm going, you know, still got some partying to do, but it's going to be hard to get me off the desk today. And speaking of that, kids, next week, Friday, the 27th, we're just going to keep the room open. I'm probably going to be the only one working. Open house, free for everybody. Come and bask in the glory of me. It's going to be a lot of fun. We'll show some algorithms. We'll talk about the 539 call and the QQQ. I want to introduce you to my algorithmic programmer. His name's Soligello. He's part of the room. One of the more epic calls I had seen in a very long time. And right now, this QBERT is working, my boys and girls. Woo! We're in the QUBT right now. We're always trading at the same time doing the show. So a little distracted watching my stuff.
All right. So next Friday, we will put Kenny's room on YouTube. But more than that, we'll just open the room up more broadly. So we will be sending out some emails about that in the coming days. So
yeah. And I think we'll even do something more special. I think we keep the room open for the rest of the year. How about Friday, Monday, Tuesday, and then we start drinking?
That's fine.
All
Yeah.
right. All right. We'll see how it goes on Friday.
We'll see how it goes on Friday. How about that? All right. Hit the bid.com, guys.
All right. Good luck. We're long QUBT. Here we go. $17. Come on.
All right. The UVXY. Oh, shit. What was the level we said? 30? No. I'm looking at the Q. Yeah, he said 30. Okay. All right. We'll see. I don't know. Okay. In reading Louis' ASC Crypto Daily note this morning, which if you don't get, you should sign up for. The link should be in the description, but if it's not, I'll drop it in chat right now. Louis said he's not buying this dip, which not encouraging to me. That was his takeaway. Not buying the dip. Talking about Solana. Solana's pissing me off to no end. All right. Let's do this. Louis, you're here. We're bringing you on. It's Crypto Friday. We have to talk about cryptos. So here he comes. Oh, you don't come yet. Wait. Where's the thing? There we go.
Got my fingers on the pulse, avocado and toast.
Louis,
Hey Spencer, how's it going?
Help me out here, please. Is there anything good to say about crypto?
Well, it's periods like these where I just love my job, right? The market environment is literally shifting on a day-to-day basis. And we had Bitcoin above 100K and then we just backed off immediately and then just being really nimble with the data. And so it's market environments and it's tapes like these where I just love my job because it's changing on an hour-by-hour basis and it's just fantastic.
Ground is shifting beneath our feet.
Yeah, and so look, when I put that note out that I'm not buying this dip, there was I put that out, about 12 hours ago, when it was afternoon my time. And the market environment has just changed dramatically, right? We've just seen so many altcoins literally just get the shit kicked out of them. I want you to pull up that chart of the average altcoin chart. So the average altcoin since 2 weeks ago, since the 9th of December, down 30%. And this was the data from about 24 hours ago. So,
this might as well be 10 years ago.
Yeah, exactly. And so this 30% is probably 40% now. And so we are getting some really good washout here in crypto. What concerns me, however, is that we haven't really seen a washout in positioning in the futures market yet. So that does concern me. So if we do see macro continuing to decline in the next few days, and in the next few sessions and into next week, then there's a risk that a lot of this positioning that hasn't closed out in the futures market and crypto then begins to cascade out of the market, particularly as we're entering into an illiquid period. So that's a big concern for me. So I want you to pull up that triple pane chart that I sent you as well. So that's a really big one. So this has really helped to inform me to be really nimble and to shift immediately back bearish over these last few days. So Solana struggling at these former all-time highs. This thing's just been a disaster. And this hasn't incorporated the data over the last day or so, where Solana is now at 188. So as soon as Solana lost 200, that was it. You're out. That's the level. Ethereum below those pivot highs, again, that was the level. You're out. And then it's struggling at these March highs, momentum diverging. And now Bitcoin below 100K. And that 100K is a really important one because plot the next chart, Spencer, the Fibonacci extension level. This is all perfectly normal corrective behavior because Bitcoin is retesting or is testing this 100K level, which is the first Fibonacci level that we've been talking about for ages. As soon as Bitcoin broke out, 100K was the target. This is why, because you get this market action, you get that bearish divergence into 100K. And so again, I come back to my previous point where if we see macro continue to decline over these next few sessions, I'm not sure whether that's going to happen or not, but it looks like we're getting a really good washout here. So it looks like that it could be following the historical pattern of what stocks have tended to do, where stocks sell off quite aggressively when power speaks and then just recovers in the next few days. So we could just be sitting up for that playbook again. But if we continue to deteriorate, then I'm really concerned about the lack of closing of open interest. So I want you to pull up the open interest chart. We're going fast, but this is the market environment that we're in. We're moving fast, baby. This is the chart that kind of scares me. I haven't really checked the data over the last 24 hours, so this could have changed. But the fact that price is making new lows, open interest hasn't really budged, to me suggests that traders aren't really closing out their positions. They're just viewing this market action as just regular correction or regular corrective action. And what concerns me is that, again, if we do see that weakness in macro over the next few sessions, then we could see a bit of cascading of liquidations, which has been a while since we've seen that. So that's the biggest risk that stands for crypto, where if Bitcoin is trading in the 90,000s and altcoins have got the absolute shit kicked out of them, imagine what these altcoins are going to look like if Bitcoin is trading in the 80,000s. But there's some light at the end of the tunnel with this, right? So if we do see even more corrective behavior in Bitcoin, which again would be totally normal, altcoins get the absolute shit kicked out of them, that would be an amazing.
Maybe most of them do, right?
Most of them do.
There's bound to be some. There's bound to be some randos that there's always going to be some dispersion in altcoin land. But yes,
look at Farcoin, right? Is Farcoin up? Let me have a look at Farcoin. You see, it's so.
But also we haven't seen the type of cascading selling that you're talking about since we've had these ETFs, right? That hasn't happened. So I wonder how that would change the market dynamics. Maybe it wouldn't have an effect at all, but it could. The fact that you have these institutions that are now large holders of Bitcoin. I don't know.
Now, Bill M says JC's ears must be ringing from all this bearish talk. So again, this is where we're at right now.
Did you read JC's note this morning? It seemed pretty bearish to me.
But there is some light at the end of the tunnel here, right? If we do get this washout in Bitcoin, I think that's going to be a fantastic buying opportunity, because let's not forget, longer term, we're still in a bull market. We've literally just broken out in Bitcoin, haven't even broken out in ETH, haven't even broken out in Solana. Our cycle indicators suggest that we're definitely not early. We're probably leaving mid and entering into late cycle. And so I believe that there's still tremendous upside here in crypto. And so I think any substantial weakness, which is what we're seeing right now, I think is going to be a tremendous buying opportunity. But I think just in the short term, I really want to see how this positioning washes out, and we'll see that over the next few sessions.
Something like Solana is sitting on its VWAP from the August 5th low, and Bitcoin for the first time here today actually testing its election VWAP, which was the breakout candle VWAP also. Yeah, we'll see.
All right, there's a lot to think about. What we just said. Gonna let it marinate.
Yeah, just let it sit there. That was quite fast paced.
That was very fast. Yeah, John just says stop selling. Yeah, all right, everyone just stop selling. Yes. Duh. Why didn't we think of that?
That's the wrong attitude, John.
Why didn't we think of that?
I think, in times like this, you want to start thinking about the time frame. You have to wait to sell. You don't want to be sitting in positions that are staked, that you literally can't sell while everybody is leaving the party.
Yes.
Right. So protect yourself. Make sure you have crypto accounts that work and don't lock you out in times of volatility. And make sure that your positions are not staked, so that when shit hits the fan and you think, oh God, I really need to sell now, you can turn and do that and not be stuck and have to wait 5, 6, 7, 8, 14 days.
Cannot endorse that enough.
In that time, in the time to de-stake, you can give back so much of your gains from this bull market. Don't let that happen to you. These crypto.
If you want to be a little bit more sophisticated, you can utilize futures and hedge the position with a short.
Go. Who even needs Bitcoin? We have the futures. We have the ETF.
In some cases, you probably can. In other cases, those futures markets are probably too illiquid, and most people don't want to venture into them. Right?
Bitcoin's futures.
No. The crypto futures markets are tremendously liquid, but it's just a little bit more complex. And so that staking, if you're only getting 3, 4, 5% from staking, is it really worth that additional risk with that lockup period?
No.
It's a trade-off.
You got to de-stake and be ready.
Don't be like me and forget you had staked this stuff years ago, and then you go to sell it and you can't. Right?
Yeah, because that's nice to know that you can go to the futures market, but 99% of people want nothing to do with that.
All
Unfortunately.
right. We're about to open here. It's 9:30. Let's do some quick recess and get out of here, all right?
Cool. That's my first recess.
Great.
Really? Jeez.
Steve, I'll give you my weekly Sopranos update.
Yeah. please.
We got to the episode where they are playing the stock market last
Oh,
night.
so good. Where Christopher's running the boiler room. So good.
Oh no, I didn't get there yet.
Oh, fantastic.
That's okay. That's okay. Spoiler alert. But no. Just Carmela she made a call to her broker to buy some shitty biotech stock, and it's like, all right, they're playing the stock market. This is 1999. This is the .com bubble, right? We're doing it. We're in it.
And it's a great side story in the show. It has legs. It gets better.
Okay, cool. Very much excited. I'm very much excited for this stock market Sopranos crossover.
So you're in 2? You're in season 2, is that?
Season 1.
Still 1. Okay.
Yeah. Right. We watch like 3 a week or something. So
wife is enjoying?
Yeah, good show, man. It's so New Jersey. This is like the most New Jersey show that's ever been New Jersey ever. And I love it. So that's what I got.
Louis, you got anything? This is where we say
we lost Louis. No. All right, Louis gone. Bye, Louis.
Okay.
Oh, wait, no, he's back. Louis, you here?
Yo, I'm back.
Okay. You have any recess?
Have any recess? So, I mean, it's summer and down under. So we spend our Christmas going on the beach, and so that's what I'm really looking forward to. Just heading over to Topor. So it's a big lake. It's actually the biggest super volcano, dormant super volcano in the southern hemisphere. So awesome lake. So going to go there. Just going to go take in all the sun and just enjoy Christmas.
That's so bizarre. It'll never not be weird to me that like people in Australia, New Zealand have Christmas during summer.
It's awesome.
So
fantastic.
Weird. So weird.
Just go to the beach. I mean, it's essentially like a Florida Christmas, right? You just go to the beach.
That's
so
good
weird.
Stuff. Yeah. Good stuff. No Florida Christmas for me this year. I'm heading up to your neck of the woods, Spencer.
Hey,
we're leaving Monday after the morning show. We're gonna road trip it. Stop.
You're driving up 95?
Well, because we got to go to Jacksonville first.
How far is that drive? Like, as a Kiwi who doesn't understand these,
full day. It's 24 hours, Louis. So
a 24-hour drive?
Yes, that's 24 hours if you don't stop at all.
We're gonna do a
24-hour drive.
Yeah.
That's only if you don't stop.
Yeah. No, but we're gonna do one day to Jacksonville and then one day to Connecticut.
Oh my god.
Almost broken in half that way. It's probably going to be 10 and 14.
That's brutal.
We got some animals that need to come with us and things like that, and things that need to be transported, believe it or not.
All right.
Yep.
Good luck to you.
We're road tripping it. And then we're going to take our sweet time on our way home and stop in some
You're going to go out west, right?
Yeah, we're going to head inward instead of hugging the coast and riding home along like the Eastern Corridor. We're going to go check out like some places we've never been in Tennessee. Maybe even Alabama, Mississippi. I don't know. Maybe go visit some friends.
How long is this trip going to last?
We're going to stop in the Great Smoky Mountains, Spencer.
How long is this trip going to last?
I don't know.
Okay, I have recommendations. I've been to like Kentucky and that stuff. That area.
Well, we're planning to stop in like Nashville. I'm open to Kentucky.
Okay.
All that. So let's.
All right.
Yeah, I'll have my laptop. I'll be around.
Wow, this is quite the. When you said inward, I thought you meant like Pennsylvania. No, you meant like actually inward.
We're going in, and then we're going to come down. We're going to come down along the Panhandle, and go that way down.
Oh boy!
West
All right,
Coast.
that's an adventure. All right, let's get out of here, guys. Market's open. We got to trade. So real quick, coming up. Actually, it's Friday, so we don't really have much. We do have off the charts coming up. The newest episode is going live at the top of the hour. And also, if you go to the page that I will drop once again in chat for the options live event from yesterday, if you pop in there at around 1 o'clock, maybe you'll see a new live video. Maybe Sean will be live with JC at 1 o'clock on that page that I just put in chat. I don't know. All right, that's what we got today. Thanks, Louis. I know it's early for you. or late, I guess. Thanks, Fawn. Thanks, Kenny. Thanks, chat. We'll be back full crew on Monday. Monday's guest is Stephen Weitzel.
Oh yes, I'll
the
be
show.
here. I'll be here for that.
Talk window dressing. And thanks for watching. Smash the like, subscribe to the channel, follow us on the socials, on the X, on the Instagram, on the Twitter, on the YouTube, on not on TikTok, but maybe we should be. I don't know. I don't know. So do all that, and we'll see you guys. Have a good weekend. All right.
Thanks for all the advice in the chat. You guys are the best.
You guys are great. We love you.
Have a great weekend, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go